Hi guys, and welcome back to another video. And this video is going to be very quick and very simple. It's going to be all about risk management on how I use it on my inverse strategy. Okay, so here we go. Let's get straight into it. Here we go. This is a trade I took today. I had SMT. We invest this fair value gap. How would I manage this risk? So I use 20 pips normally. I use 20 pips as my stop loss on majority of my trades. Right, so 20 pips I have a calculator at 20 pips. However, not every time I will be calculating my risk on 20 pips. There might be scenarios, it might be 40 pips, 50 pips, 80 pips, depending on how volatile the market is, depending how the market moves, I will go based on that. Okay, I won't go just because I won't go just because for example, if I was to calculate my risk on 10 pips and then have it on 20 pips, that is the most dumbest thing you can ever do because you're basically you had planned to risk at 10 pips, you calculated the risk at 10 pips. However, you're for some reason now using it at 20 pips, so you doubled your risk. What are you doing? Right? Anyways, let me just fix this real quick. All right, anyways, so for example, in this trade, okay, I'll calculate it on 20 pips. That's how I go about because I prefer to have my stop loss about like on the candle below, like just near the low or somewhere. Because with my strategy, I'll explain my strategy in another video. My strategy is very straightforward, right? I would look for SMT inverse and context of buy side liquidity, sell side liquidity. Anyways, so in this one, we inverse this fair value gap, right? Over here, we calculate our risk at 20 pips, and then I had my take profit on this high up here, right? Anyways, sorry, 1 second. All right, so I would calculate it on 20 pips, keep my stop loss here, and then move it to break even. Once it hits the break even, boom, done. And then aim for the trade, aim for the high, whatever it is. Yeah, so this trade was a break even, and that is completely fine. So, anyways, for example, here, once again, inversed. I had SMT, stop loss here. Do not calculate it here. Do not calculate it from here. Just calculate it from 20 pips. Give yourself like give the inverse a little a breathing space, okay? Because you want to play it on the safer side. You want to go based off risk to reward. You don't want to go based on how much profits you see, blah blah blah. That's when you're going to be doing it all wrong, okay? For example, once again, let me show you another trade here, right? We've got to invest here. I'm just showing you how to manage risk, nothing else, okay? So for example, here we invest this fair value gap, bullish fair value gap. So where would I manage my risk? I won't go based on 10 pips. No, I would already have it from 20 pips, and we had a candle close right here. I would calculate it from even 20 pips will be quite no, I wouldn't really like that because of my strategy. I exit the trade of candle close above the fair value gap. So I'll probably calculate it from 30 pips even, yeah, to be on the safer side. And then aim for the lows basically. Just aim for the lows down here somewhere. So this low right here, yeah, 1 to 2, completely fine. So I would have took this trade, manage my risk from this point, 28 pips, sure. Manage my risk from there. Even 25 pips, I wouldn't really mind. Realistically speaking, I wouldn't mind just to get the extra profit. It does go my way. If it just ends up going to the hard stop, I'm losing 3 pips. I don't mind personally, which is fine by me. But anyways, yeah, this is how I would do it. I would calculate based on this. You should do it too. Never, ever, ever just go on based on, like, for example, if you calculate it based on 20 pips here, right? And then you have your stop loss all the way up here. Don't do that. Just don't do that. Don't do that to yourself. Why would you want to do that? That's just the dumbest thing you could do. For example, let me show you. Let me show you exactly why you shouldn't do that. So we had it on 20 pips, as you can see. Yeah, so 20 pips, and then let's see how it affects when you're actually in a trade. right? So let's calculate it from 20 pips. Let's say you wanna risk let's say you want to risk this much, right? 361 pounds, which is 0.73%. Let's just do this, okay? So we're risking this much. Now, see how much see how see how it changes once you come up here. Now you're risking 542 pounds, 1.9%, right? Sorry, 1.09%. Now it went from 0.7 to 1.09%. No reason for you to do that, bro. No reason for you to do that. So that is what I mean by risk management, okay, with how I use it in my strategy. Once again, let's go over one more trade here. Okay, let's go over one more trade here. One more trade, right? Let's do this one more time. Here we go. One more time here. Look at this. Once again. Once again. What do we have? An inverse. How would I go about this? I'll calculate it to here, 26 pips, right? 26 pips. You don't calculate based on here, right? You calculate based on the candle close, and I would realistically even, I would even calculate it from here. I would even calculate it from here, so 30 pips even, yeah, so 30 pips, like somewhere around here, 30 pips, okay? So anyways, or you can do 20 pips, or sorry, 26 pips, right? So 30 pips even, and then you aim for whatever the high is, right? And then you just let it run to the highs, boom. That's it, done, right? I'm not gonna go over how I trade my strategy on this video. I'm just trying to do risk management here. So let's say if someone was like, yeah, I want to keep it on 20 pips. Realistically here, 20 pips, you're only going to be losing 6 extra pips. I mean, if you're comfortable losing like 6 extra pips, then what you risk, up to you. I personally won't do that, depending on like, depends on the situation. But if you was to calculate on, let's say, let's make it, yeah, 10 pips, right, or 19 pips, and then he has your stop loss all the way here. Yeah, that's that. Yeah, okay. Nah, that's just where your risk management is going wrong. Okay, if you're calculating it from here, right here, then just put your stop loss here and leave it. But because of my strategy, right, I would give it more breathing space, so I'll put it here realistically and let it do its thing. Simple as that. Until it gets to my break even point, then I put it to break even, and then the rest is history, whatever it is. But anyways, that is how I manage risk within using the inverse strategy. I will go over on how to trade the inverse strategy, as in the requirements that I look for, the context, etc., etc. And yes, that will be it for today. And yeah, I will be seeing you on another video. So I'll say, take care, guys. And yeah, I hope you found this video quite useful, and let me know if you still have any other questions. I am going to be live streaming PM sessions, free from Monday to Friday. So please tune in, and let's get a whole group of community together, and let's become successful all together. I could also um, get let's say if I get a funded account, a demo account, sorry, because I already have funded accounts. I'll get another account. I will be trading that in front of you guys, and we can all trade together on that account. And then let's see where we can go together. I want my community to be strong, all successful, all winning. I want that to happen for all of us by taking the trades you guys say to one of you guys later on down the line. So, anyways, I just wanted to address risk management and how I use it personally. So that's it. So I'll see you guys on another video. Take care, guys.